Global stocks initially rose overnight on hopes for trade deals, but are off their highs in late US trade on confirmation China's exports will face a 104% tariff within the day. Amid all this, the Reserve Bank of New Zealand is set to cut today, but will it be 25 basis points or 50? And confidence surveys in Australia and New Zealand show businesses and consumers were feeling a bit better, although the surveys were taken before the big tariff news. That's coming up in our 5 Things in 5 Minutes on Wednesday, April the 9th. And then in today's bonus deep dive interview, ANZ Group Chief Economist Richard Yetsenga says the market reaction to the White House's latest tariff announcements could result in a Trump pivot.
There's only one outcome which is not enormously damaging, and that is that the US administration pivots on its stated tariff policy. The market reaction, I think, puts us in pivot territory.
But first, in 5 and 5 with ANZ, global stocks initially rose overnight on hopes trade deals might soften the blow of Donald Trump's tariffs. But they're off their highs in late trade after Trump confirmed an extra 50% tariff on China within the next day. That means China's tariffs will add up to 104%. The S&P 500 rose as much as 4% in early trade after bounces in Tokyo, Hong Kong and London after comments from US officials that trade deals could be done. But those gains evaporated this morning when the White House confirmed the extra 50% tariff threatened yesterday by Donald Trump will come into force at midnight tonight in Washington. That's 2 p.m. today, Sydney-Melbourne time. Here's ANZ economist Bansi Madhavani from London on the S&P 500's initial bounce and its fragility.
Look, the reality is reciprocal tariffs announced on 2nd April are set to come into effect today. So far, no concrete deal has been reached between the US and any of its trading partners. But the fact that channels of dialogue are open and policymakers are showing openness to negotiate is offering hope to the financial markets that some sort of agreement can be reached.
As of 4 a.m. Sydney-Melbourne time, the S&P 500 was flat, the Nasdaq down 0.1%, the US dollar index down 0.3%, the Aussie dollar down 1% at 59.77 US cents, and the Kiwi down 0.7% at 55.58 US cents. The US 10-year Treasury yield was up another 10 basis points at 4.26%. Gold was up 1% at $3,004 US dollars an ounce, and West Texas oil futures were down 1.6% to new 4-year lows under $60 a barrel, $59.60 a barrel. Number 2. Against this volatile global backdrop, the Reserve Bank of New Zealand has a rates decision today. ANZ New Zealand Chief Economist Sharon Zollner is picking a 25 basis point cut to 3.5%. She says that was a near certainty until the US tariff announcements last week roiled markets.
The market has concluded that there is a chance that the Reserve Bank could deliver a larger cut, 50 points, and that's entirely reasonable. But essentially, we think the Reserve Bank has the luxury of time to wait a little bit and see how things pan out. There's still an enormous amount of uncertainty about where things are going to go from here. The direct impacts of the tariffs on New Zealand should be quite manageable. It's a 10% tariff on less than 13% of our goods exports. There are some offsets. It's clear China's going to be attempting to stimulate domestic consumption quite aggressively. Some of our competitors in some markets have been hit harder with tariffs, for example. But it is clear this is a significant downside risk to the economy.
Number 3. The Monetary Policy Committee in New Zealand will cast an eye over the latest NZIER quarterly survey of business opinion, which came out yesterday. ANZ senior economist Miles Workman says the survey indicated some disinflation was still to come, potentially slightly slower growth than the Reserve Bank had been picking, but overall that the recovery had begun.
A few warning signs that things aren't all going perfectly in a sense of the economy certainly not gangbusters at the current juncture by any means. But at the same time, these data predate tariff announcements and recent global market wobbles. So you do have to ask the question, are these data obsolete? And ultimately, the answer to that question comes down to how persistent this global uncertainty is.
Number 4. 2 other confidence measures taken in Australia before the tariff news came out yesterday. ANZ Roy Morgan consumer confidence edged up again last week by 1.5 points to 86.8. Here's ANZ economist Sophia Angala.
Comparing the series now to where it was immediately before the RBA's 25 basis point cut in February, the series is up just 1.7 points. So that lack of material increase that we've seen in recent weeks following that RBA rate cut may reflect recent global trade uncertainty weighing on consumer confidence, which has then likely offset some of the upward pressure that would be placed on confidence from stronger domestic economic conditions.
Number 5. And NAB's monthly survey showed business conditions in Australia were stable in March. ANZ senior economist Adelaide Timbrell says the reading is already out of date, with forecasts and rate cut calls already changing following the tariff announcements.
We're not necessarily changing our economic outlook in terms of real GDP growth, but what we are changing is our Reserve Bank call for rate cuts. We were initially, before this US tariff announcement, expecting 25 basis points of cuts this year. We're now expecting 75 basis points between May and August. What that does is it creates insurance against a potential global growth downgrade and keeps the economic outlook similar, but the economic outlook is similar only because there's going to be a lot more stimulus than there would have been without these tariff announcements.
Adelaide Timbrell there. Now, in today's bonus deep dive interview, ANZ Group Chief Economist Richard Yetsenga says the size and scale of the market reaction to the latest US tariffs could cause a pivot by the administration as they see Main Street investors are taking notice.
I think we're in Trump pivot territory. A Trump put certainly hasn't rescued the markets, and there are stark differences between those two things. So I want to talk about that, and also why, unfortunately, picking the timing of the crescendo of this crisis, I think, is unusually challenging. In my career, I haven't seen the likes of what's occurring in the US and the world right now. The crises of my time, the Asian crisis, technology bust, GFC, and even the COVID pandemic were eras in which some degree of latitude was reasonable when judging actions. But that also meant as the pennies began to drop, the policy path and the timing could be understood. Conventional economics, if you like, has a certain logic to it, and I think you could rely on that during those periods. But current events are an error of economic reasoning, in my view. Tariffs at the scale the US has imposed and other countries have retaliated with are enormously damaging to global activity. There's no fine judgment about that. And as such, there's only one outcome which is not enormously damaging, and that is that the US administration pivots on its stated tariff policy. The market reaction, I think, puts us in pivot territory. The administration's stated belief is that Wall Street and Main Street are separate, and certainly they can trace somewhat different paths, but they do have to have some connection as they both represent an economy, and in fact, in extremis, they're joined up and they become one, and I think they're now joined.
So when might we see a pivot?
The absence of conventional economic reasoning makes it much more difficult than usual to pick the timing of the pivot. How much financial economy and in fact real economy damage will it take for the administration to choose a different path? I don't know, but I think they eventually will. We anticipated tariffs in early April, but not of this scale, and our forecasts need to respond to our error. The US is a quarter of global demand. It's taken its average tariff rate back more than a century, and of course other countries have added tariffs of their own, compounding the challenges for the global economy. In the near term, these tariffs, coupled with the market response, are going to result in a discrete shift in the data. The emerging trend in some of the US activity data over the past months, weaker activity and stronger prices, already give a sense about what we're likely to see over the coming weeks and months, or at least as long as these tariffs last.
So how do these tariffs change the global economic outlook?
We'd already lowered our US growth forecasts and anticipated a weaker global economy, but these tariffs, I think, cause three broad shifts. One is activity will be even weaker than we anticipated, particularly in the US, but also in export-sensitive economies around the world, particularly in Asia. Interest rates will be lower as a consequence across the yield curve, so both bond yields and official interest rates. We've already added 2 more interest rate cuts to our RBA profile, anticipating 3 over the next few months. And it will be a challenge for the US dollar against currencies that are perceived to have some safety, like the euro, and at the expense of currencies that are a bit more growth sensitive, like the Aussie, the New Zealand dollar, and also currencies in Asia. As the stickability or not of these tariffs become clearer, our forecasts will reflect a fuller assessment of the outlook. And at that point, we also need to progressively determine, as the Trump administration pivots from tariffs, what are they going to pivot to? Because this clearly has been an administration of action.
Richard Yetsenga there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Wednesday, April the 9th. Catch you tomorrow with analysis of the Reserve Bank of New Zealand's rate decision amid all this global turmoil. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.